Hi, welcome to this very special edition of the Editor's Cut. And what we're trying to do today is put in a limited time capsule all of the conversations we've been having in our newsroom since yesterday, since SEBI put out its proposed guidelines on how to curb volumes in derivatives. So I would say a couple of broad kind of views coming in. One side believes that this was the need of the hour. There is a lot of concern about wealth destruction in Indian households, a lot of young investors who don't really know what's happening, getting quote-unquote hooked. And the other side of the story, and what a lot of people are also asking, is was this the right way? Should SEBI, or any regulator for that matter, really tell retail investors what to do? So we're going to be trying and getting you all of those views across the board. All my colleagues are here. And yeah, you know, the arguments, the questions and the counter questions, let's get some of them on board. Let me start with you, Neeraj, on, you know, the question about whether this is the need of the hour and this is supposed to be the soft touch. Could there be a softer touch? Should SEBI actually be telling investors where to put their money?
So the answer should be a no. I mean, a regulator cannot tell investors where to put the money. The argument, counter argument would be that because data is showing that it's retail which is losing the money, is any form of regulator or any authority trying to tell that, okay, we know better than people out there about what they ought to be doing, and therefore let's put guardrails in place to ensure that they don't do what they should not be doing. The question is, I mean, if you go down this path, then you're starting off with one asset class, one product. There is no end to where this can go to, right? Do you want to go down that path really? Part one of my argument is there. Part two of my argument is this, that right now, yes, there are 5 weekly options, etc. and stuff like that. But even when there was just 1 weekly expiry, all of you, it's not that retail was making money then, right? I mean, you look at the data of 2015 or 2012 or 2017, on a Thursday or any of the FNO derivative trades that used to happen, it's not that you were able to say with confidence that retail was losing less money than what they are losing right now or so on and so forth. Insti makes money, retail learns the process. That is what always happens. Why is it that you now suddenly citing numbers and saying that, oh, we want to come in and regulate this? There is no end to this.
I think, Neeraj, the starting point is it's not a micro problem. The SEBI regulator very clearly called it a macro problem, right? And while you say there is no history to this, I don't know if you all remember, but back in 2009 when the subprime crisis happened, the big problem India was dealing with was currency derivatives. You had corporates, significant number of corporates who were making tons and tons of money on having currency traded in terms of derivatives. What happened then? Subprime crisis happened, foreign currencies went for a toss, corporates burnt their fingers, and burnt their fingers hard and bad. The regulator then came in and said this is not going to be allowed. You can only trade if you have a real exposure to foreign currency. Of course, that ruled out a lot of the trading and the additional other income that was aiding corporates. So I think, Sajid, you'd agree, when times are good, everything's great. But when it reaches a point where it could, you know, go the other way, you've got to act, and this is not one retailer problem.
Times were never good. You think
no, so 16,000 crores is being lost every year. I mean, that is significant wealth.
But if you look at, if you look at the past as well, the numbers may be different, and because the numbers are different right now because the trading activity is very high.
So the point is that, okay, the regulator should not intervene into market forces because let the market forces decide it for themselves. But if the system is getting misused, then the regulator needs to intervene.
Is this the right way, Sajid?
No.
So let me please finish your point.
So let me give you an example. Just before coming for this show, we got a call from Jabalpur asking us to invest in options trading. And Samina can give a detailed on what the conversation was. Samina, can you elaborate?
Yeah, so we had a call where a lady on the other hand said, Madam, sir, आप लोग को ऑप्शन ट्रेडिंग करना है, टू विच ऑफ कोर्स आई प्लेड अलोंग एंड सेड हाँ हमें करना है, कितना पैसे का जरूरत है, आप आइडिया देंगे, हम लोग आपको टिप देंगे, तो आप कर दीजिए और बहुत पैसा बनेगा इसके अंदर. आपके पास डीमैट अकाउंट है? ऐसे डीमैट अकाउंट जरूर है, पर आपको आता है, आपने कोई एग्जाम दिए, क्वालिफिकेशन है, आप खुद करते हो? टू विच शी सेड मैं भी करती हूँ और डिपेंडिंग ऑन कैपिटल कितना है आपके पास. अगर कैपिटल ज्यादा है, बहुत सारा पैसा बन सकता है. कैपिटल थोड़ा है तो थोड़ा पैसा बनेगा, बट ये टिप के ऊपर आपका पैसा जरूर बनेगा. Now this was of course her bad luck. She called Sajid and I took the call. But having said that, if she had called a 22-year-old right out of college,
I'm saying that is it illegal? It's right now?
Gambling in this country is illegal.
No, this happened in small caps.
She's saying options trading is right now. She's selling a service. It is not illegal. You're talking about this lady on the phone. What about all the influencers on YouTube showing you live?
So the regulator is clamping on them,
Yeah.
right? So they're saying that if you are an influencer, you can do an educative one, but the moment you are going to recommend a buy, sell or hold, you have to have an advisory license. Otherwise, you cannot do it. And that has come into play. So it took some time for regulator to bring in that, but it has come into play. So the question which we are trying to answer is that yes, regulators should not be coming in with all hands, but the regulators should be also guarding the thing, because you know what happened. What Neeraj was talking about.
Guarding the thing. What is being guarded?
Yes. So
what is being guarded?
Philosophy aside, I just want to point out two things. That out of the 7 proposals, only one actually stops you from trading, and that's when they are suggesting that you will just have 1 weekly options expiry per exchange.
So it's not all the other proposals,
all the other proposals
options.
actually are trying to stop retail participation from taking more positions than they can.
Making them expensive for them to trade, basically.
Is that simple. No one's stopping them from completely, taking money off the table. It's just about largely making sure that the risk is in place for a lot of these people, and hence systemically things are not. They wouldn't go awry in general.
So we've had the broad sort of arguments in place. Let's talk about whether this has actually been such a huge risk to people. Now, from SEBI's point of view, you're saying 50 to 60,000 crore rupees. That's a cumulative figure of household wealth is being destroyed. The other concern is that you're not putting it in things like mutual funds or banks, bank deposits, etc.
SEBI is saying mutual funds, IPOs, cash market, wherever you can create capital
in a more organized manner.
But my question is that if this is being treated as a quote-unquote, very quote-unquote sinful activity.
It's not a sinful activity which SEBI is saying.
No. That's what I'm saying. Something which is a vice of sorts, jiski aadat ho rahi hai, which is, destroying households or destroying the propensity. There was one comment also talking about how youngsters don't want jobs. They want to sit and just do F&O.
And the government needs to push employment and jobs and skilling, right?
My question is that if there is this propensity for vice, will regulations even help it? And should regulations help it? I mean, these are adults who are trading at the end of the day, isn't it?
They could be adults trading at the end of the day, but at the end of the day, they're also putting at risk a lot of stuff for the market as a system. If you look at 10-15 years back, when you had those big, great crashes of the stock market, many people lost their money and they never came back into the system.
How is that putting the market at risk?
If they make losses, they will not come back to the market.
How is that putting the market at risk?
It is because you're bringing down the pool of people who are going to invest in the market. Simple as that. We saw 6.5 crore people adding to the market after COVID. Simple, in last 4 years. And
in some sense, Ajit, this is my limited point is, in some sense, this is somebody making a decision that there is X set of activity happening. Out of that, X minus Y is something that is good for the people because they don't know what they are doing. But the remainder is not good because I know that what they are doing is wrong. Where does this stop is my question. Because right now it started with this. Tomorrow it could move to other products. There is nothing to say that people lose money in options, but they don't lose money in SME stocks, or they don't lose money in small cap stocks.
Yes.
What if there are restrictions about small cap trading tomorrow?
Neeraj, but there's also mis-selling. We saw what happened with ULIPs.
That happens in ULIPs, that happens in small cap stocks, that happens in options.
As a job, I'm saying
it happens everywhere. Where does the buck stop?
You've got to be the caretaker, right?
Where does the buck stop?
It shouldn't stop if you're fixing a problem.
Fixing a problem, that's right. And especially if the mandate is to secure retail investors. The point is that, okay, you want to trade in a product which is risky, then you need to come into the market with capital and knowledge so that you can trade in the product in such a way.
And regularized drugs, regularized gambling. Why should anybody tell you if you should gamble or not gamble? Or smoking for that matter. There are so many vices that our country as a country controls, and you can only control as much, right? The fact remains...
Smoking is in control.
No, so it's
got a sin tax.
So it's interesting.
Okay. Put a sin tax.
Put a high tax.
It's interesting you brought it up because it's a similar kind of debate whenever you debate some states putting in prohibition for alcohol.
Yeah.
Look at the outcome. You have spurious alcohol, you have smuggled, things, and then everything goes underground. My point is, if the sin, quote unquote, again, in this case, is a propensity to
curb,
to gamble or propensity to speculate, are you going to curb it or are you going to move it elsewhere? I mean, there's some comment, and I'd like to know everyone's views on this, that are you going to see an increase in volumes perhaps on commodity derivative side? Because it's relatively not as regulated right now, relatively not so much of a lens and so much of a glare on it. And the people who want those options, I mean, you have unified platforms right now, right? A lot of your brokerages, you can do it either here or there. They just want that arbitrage. They don't care what the underlying asset class is. So aren't you just going to push that somewhere else?
Just to flip this, if you both are arguing, saying that this may not be required, would you let this remain the way it is and have the country lose 60,000 crores a year, 91% of trades are loss-making? What would you think is the right way to deal with this?
I also want to come in on the fact that cash market stocks, it's not that they are completely unregulated. You have ASM framework, you have trade-to-trade. So even the relatively smaller illiquid cash stocks are under regulation. Secondly, I want to talk about leverage because we are missing that out completely. With options, with derivatives, with futures, of course, you can take leverage of up to 6 times. With options, it is unlimited. It can go to 10 times, 20 times. With the same amount of money, if I have a lakh rupees right now, I can take positions worth about 10 lakhs, even 20 lakhs in options. In cash market, it is not possible. It is only as much as the broker allows you to take it, and it will not be more than 2 times. Which means that when you're actually taking such a high leverage in futures and options, at some point in time, someone else will have to come and step in to suggest that, hang on, we need to just make sure that certain guardrails are in place, and that possibly is what SEBI is also thinking.
Are you flipping to this side of the debate?
He's on our side.
I have always been on this side.
Oh, so
it's just seating. It's Neeraj versus all of us.
Okay,
what I'm trying to say is that I'm gonna be in this grey spot and say that I'm for certain regulations and I'm against certain regulations. When it comes to completely expunging weekly options expiries, I'm totally against it because I believe that people do understand what they're doing, and if they don't, they will get to know. But when it comes to certain other regulations, that is making sure that the risk is in place, I'm completely for SEBI bringing those rules in as well.
You know, Tamanna, SEBI has been looking at something called a product suitability framework. What kind of product is suitable for what kind of investor?
Okay.
If that kind of framework comes into play, and you satisfy those criteria.
How will they assess?
Based on your net worth, they will be based on how much of net worth you have, or what is the capability.
So it's not intelligence, it's net worth.
Exactly. I might be rich and foolish.
Or
if you're rich, you're smart.
No, I could be rich and foolish, soon to be
inherited wealth.
Yeah. Or the understanding of the product. These are many, and this thing has been getting debated. Right. That's one way to look at it.
Let me throw this proposal out there. Is it a good idea, for instance, do a little exam, do a little online exam for whoever wants to, then you license it.
Yes.
Then you do a little online exam for whoever wants to do futures and options trading. Let them go through that sort of
module.
Say they've understood it at the end of the day, and then that disclaimer is out there, right? You as a regulator have educated.
Washed your hands off it.
Not washed your hands, but you've educated, you've imparted that, you've put all the caveats. That
no, but I think
Neeraj doesn't agree with that.
No, the reason why I don't agree with this is, for example, the reason why, right? Some of the smartest people who make money as day traders will flunk in an exam any given day. But they, by virtue of the experience of the trading, are able to make a lot more money. So I'm just saying an exam may not cut it.
How do you protect the new investor?
By exam, okay, so Neeraj, more than an exam, do you understand the following?
Create this as a module in college and school.
Do it in all languages.
That's a good starting
point.
I'm
saying it's a great idea, Samina, for example, to teach investing from grade 11. I know in Delhi it's maybe 10 plus 2 plus 3 or whatever, but from Bombay standards, I'm just saying after 10th, you get into
module,
junior college or whatever, make investing a module. There are ways to do this. by the way, morally, I do believe that what SEBI is trying to do, it's got the best intent at heart. The only thing is whether the moves that have been proposed right now, do they get the desired effect? One. And two, my only problem, or my one single biggest problem is, where does the regulator stop? Because in the regulator's mind, it's got the authority to do X, Y, Z. Right now, it's chosen to do X. Tomorrow, if the regulator chooses to do Y, which you may not agree with, what will you say to that?
But Neeraj, I think it's the intent. You're going back to that. It's
the
thing
which SEBI has been harping for the last 1.5 years, that it's not my duty to look at where people invest. They're getting the money, it's their money, where to do it. But at that point in time, it was just a micro issue. Now it has
become a macro issue after Madhvi Puri which mentioned it's a macro issue. Until then, this term was not used.
Are the RBI governor also pushing for it? The liquidity issue which is coming into the system because of that, that's also one of the reasons why.
The point is not just only to give Neeraj company because he's the only one on that side. But if the basic problem is that people are not making money doing this, should that be the regulator's concern? Should profitability be the regulator's concern? Because the data they put out is 92 lakh investors in 23-24. Only 14 lakh made money, about 85% are making money, the rest is losses.
I think the problem is you have outside hedge funds making money, so it's almost taking your gold and silver and leaving the country, right?
As a regulator, why should I care?
Tamanna, a year and a half back, if you look at the NSE data which comes out on a monthly basis, that number of active investors on the NSE FNO were roughly around 44 lakhs or 45 lakhs.
Yeah.
Today it's 92 lakhs.
The quantum is
huge. Within a year, it's almost the
My question is, everyone is losing money. Why are they coming back?
And 97% of them are losing money on an expiry day.
With the hope of making money on the next trade.
And best part is they're only trading for 35 minutes, 40 minutes.
How growing if everyone is losing money is my point. If there's something out there that is being missed, why is everyone coming back? What is standard?
I'll tell you the reason why everyone is coming back. Because the average ticket size is only 6,000 rupees.
So let me put the thought out. Your standard intelligence would tell you that people will come, if they burn their hands, they'll stop, they'll go away, problem solved. You're saying that's not happening.
No, but that is happening because you actually have a new crop of traders who are coming in. So you have the old crop who have lost money or have survived and made profit, and they become experienced and they stay in the markets. And those who have made losses, sustained losses over the course of the years, they move out. In the meantime, you have a new crop of
new entrants. Guys, I'll tell you what.
If an average ticket size for a retail is 6,000 rupees, what is the maximum loss that he's going to make?
6,000.
Sajid, right? The rule of risk assets is that bulls make money, bears make money, pigs get slaughtered. That has been the truth for decades, for years, for centuries, and that stays true. The argument that we are having, this is my last point by the way, that we are trying to protect the retail investor from trading right. It's okay, let the retail investor come in, let the retail investor lose money. Maybe the retail investor, after losing that large pool of money at a young age, will go and invest more systematically, because the retail investor would know that this is not for her or him, will invest systematically and actually will create more wealth over a period of time.
I agree with you,
because markets teach you more
if you look at
than
the
what regulations teach
you. It's the fees you pay the exchanges.
If you look at the intraday report of SEBI, it says that you made 7 out of 10 lost money in the first year, and by the third year, if they sustained, it's 5 out of 10, So you are learning through the market curve.
Thank you for proving my point.
Yeah, but that's in the cash market, not in the FNO market.
Okay. But that's, that's what I'm saying. Where will the buck stop?
No. So one thing. I wanted to take that point forward. The reason I asked that question about और लोग कहाँ से आ रहे हैं? If they're all losing, you're saying that new crop is coming in.
ये जबलपुर से आ रहे हैं ना?
Exactly. So what is
जबलपुर वाले ला रहे हैं.
I think I think in a sense these regulations may have ended up missing the woods for the trees, because are you in any systemic way attacking that whole
community,
that ecosystem which is pulling people in, which is your, I don't want to say influencers, but that's part of it. Your Instagram, your YouTube channels, which is just completely advertising that this is a casino and you can come and make money. So there is someone out there, or there is a concerted number of people out there pulling people in. And they're saying, okay,
so they're doing the job of the regulator, all about financialization, inclusion, which is all very big in terms of objectives a decade ago.
No, they're doing it in the absolute wrong way.
And they're looking at the wealth effect which is happening in the market for the last 3 to 4 years.
Yeah.
And they're saying that, okay, so much of money has been made in the market, I can also make money and
So
they're getting influenced by these kinds of...
No, but where is
which
the
is
action
great.
on them? My point is, instead of
But maybe it
doing
will
which is
come.
great, where is
Maybe
the
it
action on
will
them?
come. And
I'm
let's
saying
not
which is
forget,
great.
this is a recommendation.
Yeah.
There will be a
No,
little
but
bit
I'm
of
saying
backlash
people
for
coming
sure.
into the market is great, right? Because for years we've argued, why is it that people are saving money via a bank account? That shouldn't be the case. Graduate, move on to other things, and equities
No, and
is
I
a
remember
productive
a decade
asset.
ago, the only thing that SEBI wanted was inclusion. Financial inclusion was a very big deal for India.
But not derivatives.
Well, I mean,
Not
it's,
in
you
derivatives.
can't pick and choose
But
what
that's
you
the
want,
thing, they
right?
wanted it in cash markets.
So
Actually,
now
mutual
we have
funds.
investors who've tasted wealth, and now we are fixing it by telling them, look, you've come on board. We will create the guardrails. We will help you create significant long-term wealth. And we all know the only way to do it is to significantly disciplined manner invest money for the long term.
100% right.
I think
the
the regulator...
maybe the intent is right. Maybe the move might also be right. But the point is, where does it stop?
And the point is whether this recommendation becomes reality,
I think the regulator missed the fact that the weekly product would be such a big hit. They thought that it will increase liquidity, but they never thought that what kind of investors will come into it and how they're going to invest and how they're going to lose money. And that's why the weekly product is being curved to
My
one
only point is,
exchange.
I don't like being told that I mean, as long as I'm not cheating anybody, I don't like being told that do this and don't do that. I'm a master of my own destiny. Let me choose what I want to do.
Let me be a fool if I have to and learn my lesson. I get that. But just because we're talking about the weekly thing, this one chart from the SEBI document which really caught my eye, I just want to talk about it before we wrap up, is that the expiry day volumes, the turnover, is 96% of the last 5 days for the Sensex expiry and 97% for the BankX expiry. So this is just right on that day, the volume just jumps. So this is all that people are doing.
And the time of investment is 30 to 40 minutes.
So this is not someone who's bothering
just
to
one
understand what
I don't know whether
investing.
you both, all of you will agree, but there's also a parallel grey market where this trading happens, right? What happens?
What do you call the dabba trading, basically?
Maybe you encourage that.
You're encouraging that, which might become a problem. So I think that is, again, I don't know what the SEBI's thoughts on that are, but there is a very active, large dabba trading market, which, we know about IPO pricing and listing day pricing, but you never know how that gets curbed.
If a lot of parallels are being drawn, including saying that are you treating retail investors like children? The thing is, whenever you forbid children from doing something,
they do more of it. We'll know.
They do more of it and they find another way to do it. So at the end of the day, the intent is always right, but you have to find a more effective way to do it. And I mean, investors.
But I think the biggest
maybe this is an effective way, but who knows?
But and at the end of the exchanges
they
have to
definitely know
make
a little
big
more
call,
than us,
right?
I'd like to believe.
Which weekly product to retain? That's the biggest call they have to take.
Well, BSE today, Sajid, is on fire in terms of stock prices. So I don't know what the street is thinking.
So maybe it won't turn out as
NSE
bad.
is will go for a Nifty future derivative product, BSE should be going for a BankX or something, so that the volume
might not be a bad idea to call the CEO and try and find out that if these moves get
maybe we should do that on that note.
Neeraj is pitching for an interview right over here in case they are watching. That's how to come and talk to us. But anyway, thank you so much to all of you who've tuned in for this, and tell us if you want to see more of this stuff where we just bring all of our newsroom conversations right here for you.